So after Friday's big giant head fake, which actually did cost a lot of people to suffer some big losses, especially in the cryptocurrency space, where those that were, leveraged up got wiped out. Many would say that it deserved to get liquidated if they were playing those kind of games. There were losses in the stock market as well. So I guess no surprise that today the stock market had a nice up day. I think the Dow closed up almost 600. NASDAQ closed up almost 500, 100 or so point gain for the S&P 500. Cryptocurrencies, Bitcoin's back almost 116,000. All the big cryptos are back rallying. Wouldn't be surprised to see them back at all-time highs very shortly, along with the stock market. What else rallied today? Gold, another $93 an ounce added to gold today. It closed, I think, about $4,110 an ounce. Silver, up almost 5% just on the day, closed up well over $2. I think it was 30 cents, $2.30 an ounce today, closed, I think, in the $52 range. So we're seeing massive asset price increases, okay? And I would not be surprised if this continues. But we also know that it's the top percentage of people in the United States that own the massive majority, and I don't mean majority, but the massive, let's say overwhelming majority, like 90% plus of all the assets in this country as well, okay? So they're doing better and better all the time, while the bottom 90% are struggling. So I want to share two stories with you today, both having to do with the automotive industry, okay? That I think hopefully will drive the point home, because those that are at the top, those that have the assets, it's not in their best interest to see the bottom 90% succeed and get on their feet, stay on their feet, improve their credit scores, have reserves, own assets that aren't leveraged up with debt. So before I jump into the two stories, as I always humbly ask, please subscribe to the channel. If you're not subscribed, we're growing the community. So just let me give you a little bit of background from a story out of CNBC today, talking about new vehicle prices. Prices paid now top $50,000 for the very first time. So the average price paid for a new vehicle last month topped $50,000 again for the first time ever. That's according to Cox Automotive's Kelley Blue Book. They reported on Monday. Meanwhile, auto delinquency rates remain near all-time highs, again, for those with low credit scores or lower credit scores. New car buyers, it says, have faced rising sticker prices, smaller discounts, and higher loan rates since the pandemic, especially for those with the worst credit scores. The average new car loan rate was 9% as of the most recent data from August, according to Cox Automotive's Dealer Track. That included rates of around 18 to 20% for subprime or deep subprime consumers who have lower credit scores, and they're also the ones that are more likely to default on the loans. Last month, pricing record of $50,080 comes as the auto delinquencies, defaults, and repossessions have increased in recent months. According to Car.com's Edmunds, earlier this month, the share of buyers that are now making monthly payments of $1,000 or more on their vehicle is 19.1% of all financed new car transactions in the third quarter. And that's near the record set in the previous quarter of 19.3%. It's almost 20% of new car buyers that are financing their cars are making $1,000 plus per month payments. And we know what happened with the subprime auto lender Tricolor just recently when it collapsed. So you've heard the phrase, you will own nothing and like it, or own nothing and be happy, right? That kind of was the unofficial mantra, I think, of the World Economic Forum that got kind of attached to that years ago. So the company I just read about today, a story out of Zero Hedge, weigh in on this. Give me your thoughts and comments. Again, these corporations will do, about anything, right, to find untapped resources, something maybe even if people have a little bit to hold on to. I'm talking about the equity in their vehicles, right? Most people don't have any equity in their vehicles, but for those that do, maybe because they've paid their loan down, maybe they've been fortunate enough, they didn't get over leveraged, and they have something there, albeit it might be small. We've got a new company out by the name of Yendo, all right? And this is a Dallas-based financial technology company, all right? FinTech firm that lets people, listen to this, it's another one of these head scratchers, and it's the reason for the title on the thumbnail today. It lets people with terrible credit scores tap into the equity in their depreciating used cars at a 30% interest rate, even if the existing loan's not paid off, okay? In which case the entire loan gets transferred to this new operation or company. So Yendo offers credit cards backed by vehicle equity to help customers get access to credit who may not be able to otherwise get credit due to low FICO scores. The credit card functions like a normal card, but instead of a cash deposit, it's secured by the value of the person's vehicle, right? So those that don't have decent credit, they have to secure their credit cards by making some kind of a cash deposit, and they can spend up to that amount. So now this company, Yendo, is basically saying, well, if you pledge or put up the equity or the collateral in your used vehicle, that's how you can secure yourself a credit card, even with terrible credit, all right? And then you can use that credit card just like cash to go out and buy a bunch of stuff, right? In the meantime, you've assured yourself, these people, that they not only have no equity in their vehicle, they'll never own their vehicle, but they'll likely end up losing that vehicle to repossession, all right, when they inevitably max out that credit card. So this company, founded in 2021, will use the funding to build an AI-powered digital bank that will decrease onboarding and operation costs, allowing them to focus on, here's their mission, opening doors for underserved Americans, right? Think about that. The company says that there's more than $4 trillion in untapped assets held by non-prime Americans, okay? And last May, the company raised $165 million in new capital via debt raises, right? Debt on top of debt on top of debt, to increase lending through its asset-backed credit cards, all right? So they have seized on what they say is a $4 trillion untapped asset, right? Which is the equity these people have in their used cars. What happens when that car gets repoed, which it will? They're likely going to lose their job if they even have a job. So again, full circle to close it out. There are a lot of vultures out there that want to make sure that those in the bottom 90% stay in the bottom 90% forever. Own nothing and have nothing to their names. I hated to read this article. There's not one darn thing in this article and this news story about this company Yendo that is good, in my personal opinion. to get your thoughts and comments on it. That was the story out of the Zero Hedge today. It's entitled, Mark Cuban-backed startup lets low FICO people tap used car equity, even if not paid off, right? For 30% APR, right? So that is unlocking and opening doors for underserved Americans, letting them pledge their vehicle for a credit card at 30% interest. Leave your thoughts. If you enjoy the content, please hit the like button, follow me, subscribe to the channel if you're not subscribed. With that being said, I'll talk to you all soon. Bye.